So good morning, good afternoon, good evening to everybody. Welcome to today's webinar. I'm very excited to be sort of having a real deep dive into industry trends, past, current and future in Asia. For those of you that don't know me, my name is Sarah Corley. I'm the CEO of the Alliance of Digital Finance and Fintech Associations. We are a hub for different types of finance associations across the globe. We have membership across 30 countries, and many of those members lie in Asia. So welcome warmly to all of our members who are joining us on today's call. And for those who don't know us, we'd love you to connect with us, follow us on social media, and also LinkedIn. I shall ping the channel for you to follow in the chat shortly. Couple of housekeeping rules about webinars just before I introduce you to our special guest today. You'll see that we have a Q&A function. If you have any burning questions, please do use that function. It helps us be able to manage the questions better and make sure we get around to asking as many of your important questions as we can. And we're also recording the session. So if something does happen to your internet connection or you have a pressing meeting to go to, you're very welcome to catch up on the recording. But also, I think more importantly, if you really enjoy today's session, we want you to share that recording with your colleagues as well to make sure as many people get to hear today's webinar as possible. I'm really delighted to be joined today by Zenon Capron. Welcome, Zenon.
Thanks, Sarah. Great to be here.
So many of you know Zenon. He is an expert on all things knowledge and fintech, particularly in the region of Asia. Zenon is from Capron Asia, has produced many great and fantastic resources that helps us drive the industry forwards, understand the trends, what is happening in the industry, but also what is going to be coming our way in the future. And I think that's really important to understand where we've come from, where we are, and also some ideas about where we're going for the future. Zenon has produced a PowerPoint, which he's going to highlight some of the key trends, and we are going to then have a Q&A session afterwards. So feel free to pop your questions as the presentation is going through, and we will answer as many as we can after the initial presentation. So Zenon, maybe you could just do a brief introduction about yourself and then launch into your presentation for us.
Great. Thank you, Sarah. And thank you, everyone, for joining today. I was talking to Sarah about this beforehand, and we had originally met at Money 2020 Asia earlier this year. And it's been a while since I've done a webinar. So hopefully it all comes back to me as we go through this. But it is one of the topics that we talk about on a regular basis at Capron Asia and in the work that I do. So briefly on my background, I've been involved in the financial industry for over 25 years now. I started off my career at Citibank, initially in the US and in Europe, and then came over to China with Intel, where I lived for 14 years. When I was first in China, I still remember trying to pay my rent. And to pay my rent, I would basically have to go to my bank, and which was ICBC at the time. And rather than being able to pull out that much money out of the ATM, I had to actually go to the teller to take money out. It was about $1,000 in rent every month. So I had to go to my bank at ICBC, withdraw the money from the teller, walk it across the street in a paper bag, and deposit it in my landlord's bank at Bank of China, which I would argue is the first use of mobile payments in China in 2004, walking money across the street. It truly was mobile money. And fast forward to when I left China in 2018, and I was paying my friends using Alipay. I was splitting the bill using WeChat. I was investing in a financial product from Baidu. And when we think back to China fintech, I mean, fintech in China was really an example of how technology had changed the nature of financial services. So when you think about that traditional way of just making a payment, of transporting physical money, and my $1,000 equivalent in renminbi was very small compared to a lot of the people. You'd see people come in with large paper bags with stacks of money, stacks of renminbi that they would be depositing into an account or transferring to another account. Now, why did they do that? Well, it was easier than actually transferring the money and filling out all the forms. It was more reliable because it was physical cash that you could handle. And China, for the most part, is relatively safe. So if you're walking money across the street, it's likely to get there. As much as China was an epicenter of fintech, when I moved down to Singapore in 2018 for personal reasons, I thought, okay, I'm leaving the most exciting fintech market in the world to what is, maybe an also ran in Southeast Asia. And I was very quickly proven wrong. Across the region, we've seen the development of technology and finance to fintech, as what we know today, that has made things for people across the region incredibly convenient. In a place like here in Singapore, it's brought competition into the market. So traditional banks have actually had to innovate and not be complacent like they were for many years. And then in developing markets, it's provided a financial lifeline to many individuals in each of those markets. I still remember some of the earliest work that we did in China with the Better Than Cash Alliance, which is part of the UNCDF at the time. And one of the people that we talked to, she lived in Ordos. And Ordos, if you're familiar with China, is one of those ghost cities in China. So Ordos was a city that was, China built it and they will come. At least that was the theory. Well, they built the city and nobody came. The main industry around Ordos in that particular area was coal. And so one of the people we talked to for that initial report that we did in 2016 was a lady named Kayu Ma. Her husband worked in the coal industry, but was laid off due to, if you remember around that time, commodity prices dipped quite a bit. And so the coal industry in China was really suffering. So her husband was laid off. Over the course of the next 6 months, she and a coterie of mothers in the town of Ordos started selling children's clothes online using the Alibaba platform with Tmall and more specifically for Taobao for them, for the C2C element of things. Over the course of the next 6 months, her business grew, and using these digital tools and digital platforms, she created enough economic empowerment to support her and her family. She had one daughter that was about 2 years old at the time that she was supporting, and then obviously her husband was out of work. She became so successful using those tools that when the coal industry started to pick up about a year later, her husband didn't feel the need to return to work because they were making more money through this digital effort than they could make with him being in the coal mine. And not having worked in a coal mine, I would just imagine that selling children's clothes online is a little bit more of a nicer environment that you can work from home and everything else. So, when you look at China, when you look at Southeast Asia, there are millions of examples of how digital tools are changing the lives of individuals across the region. And it's not just individuals whose lives are being changed by this. When we look across the region, there's SMEs and many different entities that are really benefiting from this combination of finance and technology that we call fintech. So I have a couple of slides that I wanted to share with you today. And then as Sarah mentioned, we'll very quickly get into the Q&A because that's probably where the more important bit is for this. The slides that I put together today are based off a report that we actually did for Money 2020 as well, calling Navigating the Future of Fintech in Asia. And so we, every year at Capron Asia in January, we do a top 10 trends report, basically looking at what we see as being the key trends across the region. This year we did a check-in in March, basically saying, okay, where are we on these? Where are we on AI, on lending, on all of the other areas of financial services and fintech within Asia? And so I'll have a link at the end of where you can go to download this report. But a lot of the findings were from this report that we also presented out there in Thailand a couple months ago. Across the region, what is perfectly clear is SMEs remain the bedrock of ASEAN. When you look at across the region in 2021, for the data that we have here, the share of MSMEs as percentage of all businesses is in many markets nearly 100%. So this is basically saying that in Indonesia, 99.9% of the businesses in that country are micro or small, medium businesses. And because of this, this element of the market, this part of the market has become incredibly critical. We often kind of think about the consumer side of fintech as being the most impactful. And that's probably because we're a little bit biased as we are consumers. And so we are the ones that are consuming these tools that are being provided by banks like DBS or by payment providers like Wise. But really the SMEs are one of the segments of the market that is the most important. And in many markets across the region, they are also one of the least well-served markets. So when you think about financial inclusion, it's kind of two elements to it. First of all, are the entities or individuals banked, and then second of all, how well are they banked? And indeed, when you look across the region, even in places like Singapore, nearly 100% of businesses are banked insofar that they have a bank account and they have access to financial products and services, but they tend to be underbanked, meaning that, fundamentally, Capron Asia is a SME as well, with 10 people here in Singapore. And for us to go to the bank and get a loan would be quite challenging. And so across the region, we've seen a lot of fintech solutions that have really been focused on this SME segment. And it is a key segment of the market going forward as well. So we see SMEs being, when we talk about this fintech narrative across the region, SMEs are a key element of that and a key element of where we need to be focused on financial inclusion. The role of payments in Asia is quite incredible as well. When you look at the growth of payments in general from 2020 to 2025 is expected to grow at 12% across the region in terms of the value of payments within Asia Pacific's cross-border payment flows. The reason why payments are so important for Asia and in general, as I'm sure many of you can relate to on this, is that they provide the bedrock for all of the other financial products and services that are layered on top of that. So once you have payments in place, then you can have lending, then you're going to have wealth management, then you're going to have other financial products and services. And China, going back to this, I apologize for using the example so much, but it is such a good case study of where fintech really helps. When you look at the development of the Alipay ecosystem as an example. So Alipay was founded in about 2003, 2004 to solve the pain point of escrow in e-commerce. So I remember shopping online in 2004 in China, and it was really a crapshoot, mainly because you were using bank transfers for most of the payments or cash on delivery. Now, the problem with a bank transfer is it's not repeatable, right? So if you are repudiatable, sorry, I should say, if that's even a word, insofar that there's no such thing as a chargeback with a bank transfer. We're very used to shopping on Amazon or Lazada or one of these platforms using our credit card such that if there is a problem, we can trust either that the platform or the credit card company will support us insofar as getting our money back for that. But obviously with a bank transfer, you didn't have that. In addition, cash on delivery could be risky as well. The delivery person may run off with the money, the merchant may sell you a dud good, the individual may receive it and say, not really interested, and send it back as a return. So the idea of Alipay was to solve that very basic issue in e-commerce. Now, it started off online, and then it went mobile, and then it went P2P, and then it went to the QR codes that we're all very familiar with today. Then on top of those payments, Alipay was then able to launch a wealth management platform called Yuebao. Now, Yuebao in China was, wealth management products in China were very cumbersome. You'd have to, similarly to my experience of transferring money, you'd have to go to the branch, you'd have to fill out a bunch of forms, risk assessment and everything else to buy a wealth management product. And then typically you'd have to lock up $1,000 for at least a month. Yuebao democratized access to wealth management products by allowing you to invest as little as 1 renminbi for as little as 1 day. And when I was in China, as a foreigner, I was able to use this platform for a period of time. And it was incredibly addictive because they essentially gamified, because you'd open up the app the next day and it would say, you've earned 2 renminbi yesterday because of the money that you have saved on this platform. And then you'd want to have 2.3 renminbi and 2.4 renminbi. So they gamified savings. On top of that, they did lending, they did a number of other financial products and services, but it's just a really good example of how payments provide the basis for these other financial products and services. Now, obviously, the narrative in Asia right now is about cross-border real-time payments. If you're not familiar with this trend, across the region, pretty much every country in Southeast Asia has its own real-time payment network. So here in Singapore, we have the platform called Fast that has Pay Now on top of it, which basically allows for real-time domestic payments between individuals or businesses, often enabled by QR codes with the Pay Now interface that sits on top of that. The discussions right now are predominantly around bilateral remittances between countries. So we've seen Singapore work with Thailand to integrate real-time payment systems such that a Thai tourist here in Singapore can scan a QR code and immediately pay from their Prompt Pay app, their Thailand real-time payment app. And similarly, a Singaporean in Thailand can use their Pay Now app, the Singapore banking app, to scan a QR code in Thailand and immediately make a payment there. The challenge with this is that these bilateral relationships are very inefficient. So one of the trends that we're seeing right now in the region is this idea of Nexus that was an initiative of the Bank of International Settlements. And the idea of having common payments infrastructure across the region to enable seamless cross-border real-time payments across the region. Now, this has been a desire of the region for many years. If you look at the website www.asiapaymentsnetwork.com, it was set up, I believe, in 2007 or 2008. And the title on the page remains the same as it was then, to enable real-time payments across the region. It took a long time to happen, but it looks like finally in 2024 and 2025, we'll get that, and that will open up a lot of channels, and again, provide that baseline of real-time payments. And then on top of that, we're seeing things like digital lending, digital insurance, and digital finance in general. AI. AI is obviously set to grow. When you look at the generative AI market and the amount of money that's being spent in Asia, it's really incredible in terms of the predictions of what's out there. Even when you look at from 2020 to now, it's essentially doubled pretty much every year up to 2024, and will continue apace going forward in the future. AI across the region is obviously at different states of development. Unsurprisingly, in places like Singapore, it's probably the most advanced as it is in the region, but even still, the usage of AI within the financial industry and within fintech is still relatively limited. And this is kind of for a couple of different reasons. I mean, first of all, because kind of this new wave of AI technology in the form of LLMs, large language models, is relatively new. And for an industry that's based on trust and risk aversion, many of the banks struggle to start to use some of these use cases around AI. So the use cases that we're predominantly seeing right now in the banking industry in Asia are mainly for internal purposes. So people using them for internal LLMs within the bank to help answer questions. There's very few that are production or customer facing at this point. Obviously, in things like risk management, AI has been there for a decade, if not more, in credit assessment, risk management, these kind of risk assessment areas. But in terms of the kind of the holy grail of a robot being able to service a consumer or even a high net worth individual automatically and intelligently, we're still not there yet, and the banks don't want to be there for that matter. But really, across all of these different use cases, we're seeing a lot, an explosion of use cases and thinking about how to do this. If nothing else, even if AI is regulated to the extent that it's somewhat unusable within the financial industry, it has, like many of the other trends that we'll talk about today, galvanized an innovative streak within the banks. There is a feeling of an arms race within the banks that whoever is able to best leverage AI most effectively in the future will have a distinct advantage. That may or may not be the case. It may not be a first mover advantage. We've seen a lot of cases where second mover is fine, but certainly there has been put a lot of effort into this. So even if we look at something like personalized marketing efforts, this is something that banks have been talking about for ages. We bank with HSBC in Hong Kong. And I still remember when we set up the account at HSBC, this would have been a number of years ago, but getting a flyer from them saying, hey, would you like to apply for a credit card? And I said, yeah, sure, I'll apply for a credit card. And it was rejected. And then 6 months later, I got another mailer that said, hey, would you like to apply for a credit card? And I figured, the company had more revenue and was more established at that point. So I said, yeah, sure, let's apply for a credit card. And it was rejected. And then a couple of years later, I got another invite, and then they said, would you like to apply for a credit card? I said, fine, yes. And I got approved, or we got approved. And then I found out that to get the credit card, I would have to deposit a time deposit with the bank. And I said, well, what is the credit limit on my credit card? And they said, well, it's whatever the time deposit is that you put in the bank, which kind of makes the idea of a credit card pointless at that point, because you're just depositing money that they have access to. But it's a great example of how we rarely have marketing efforts or product offers from banks that actually match what we're looking for at the time. And really, when we look at the idea of situational finance, it's selling the right product to the right time at the right person, and we're far from that. But this AI wave is forcing banks to kind of rethink how they approach this. So it's obviously quite appealing for them. So the key takeaways from the report, Asia leads in real-time payment innovation, which is the basis for other fintech models. I won't talk through this much because we've already talked about it, but clearly, when we look at the penetration of real-time payments across the region, it's greater here in Asia than pretty much any other region besides Europe. Around the world, the US and Canada are still trying to get their acts together. Latin America is picking up. Obviously, South America, Latin America are picking up rapidly, as is Africa as well. But Asia still kind of leads around this and may present the bellwether for cross-border payments as well. SMEs, as we talked about, critical segment of the market in Asia and being supported by new digital lending platforms that are providing them that financial inclusion that they need. And digital banks are pioneering new business models, but challenges remain largely unproven in general. Digital banks, rightly or wrongly, are one of our favorite punching bags at Capron Asia, mainly because of the arrogance with which they came into the market. When you look at the digital banks here in Singapore, there was a lot of fanfare about when these banks were launched, about the impact that they were going to have, and most of the banks here, kind of similar to Hong Kong and Australia, the banks are suffering. Very few are at profitability in any of these markets and are really struggling to figure out what the value proposition is. Now, if you look at the digital banking segment as a whole, it can be largely broken into developed markets and developing markets. So in places like Singapore, the launch of digital banks was really about bringing competition into the market. And indeed, when you look at Trust Bank here in Singapore as an example, they've done a phenomenal job of leveraging the NTUC ecosystem. So they had an established ecosystem to launch new financial products and services, and they are doing reasonably well around that. But really, the banks in developed markets that are able to capture market share are those that come with some kind of ecosystem advantage. The banks that are starting from scratch, the cost of customer acquisition cost is super high in the region, especially in the consumer side of the business. And so that's been incredibly challenging for a lot of these digital banks. So the ones that are successful are the ones that are coming with ecosystems or that are focused on niche markets. Now, another good example is ANEX Bank here in Singapore. ANEX is the Ant Financial funded digital bank here in Singapore, and they are SME focused. Now, they are doing quite well because the SME segment of the market, and I can attest to this, is very underserved. We bank with one of the three main banks here in Singapore, and we pay $25 every month for the pleasure of having a digital bank account, really where the bank has no cost of dealing with us. We pay above market rates for financial currency transactions and for payment fees. SMEs, we are treated pretty poorly by a lot of the traditional banks across the region. You have to really get up into multinational territory before your bank really starts to appreciate you. But with these digital banks, the argument is a smaller cost footprint means that they can provide better products and services. And so we're starting to see a lot of that in the developed markets as these players either leverage that ecosystem or particular niche focuses. Now, in developing markets, digital banks have a much greater value proposition because typically financial inclusion in many of the markets like Philippines, Indonesia, Malaysia is much less than in developed markets. And so the argument for digital banks in those markets is much greater. And so that's where we're seeing a little bit more traction, and the value proposition around these digital banks being a little bit stronger is in the developing markets. Wealth tech continues to grow and further democratize sophisticated investment products. You may have just seen the news over the past couple of days that Goldman Sachs is now democratizing one of its financial products, one of its funds, and distributing it through Betterment. So it traditionally was a fund you need to have, $10,000, $100,000 to invest in. Now you need $1 on Betterment, and you can start investing in a Goldman Sachs fund. And that is truly the holy grail of wealth management and wealth tech, indeed, in general in Asia, is the ability to provide a high net worth experience to the mass consumer, because as individuals, we're typically not given access to some of the sexiest financial products and services that may have better growth rates for us. And so this democratization of wealth management through wealth tech is really changing the nature of financial services across the region. And also, especially in developing markets where, the average individual may not have a stock account or may not have an investment account, but may have a digital platform account that allows them to invest a little bit of money on a money market fund or some other platform. Despite all of this talk about digitization, cash is still king in parts of Asia, across the region, and indeed in China, the government has mandated that organizations and businesses must accept cash, because as quickly as we are moving digital, there are certain segments of the population that are addicted to cash. I experienced that in some of the family that I have here in Singapore through my wife, that many of the older generation still prefers that physicality. Part of it is the fact that cash is very physical, and so it brings to mind immediate value. And part of it is the complexity of some of the digital payments. Even on MRTs and buses here in Singapore, Visa and MasterCard can be used with no, pre-registration or anything. You just take a Visa or MasterCard from anywhere else in the world and you tap and you're ready to go. Even for some people, for some people that is a bit challenging for them, and they prefer to have, the traditional cards. There was a big shift towards the end of last year that the MRT system here in Singapore was going to move from a stored balance card functionality to a pass-through card functionality. And so one of the nice things about the stored value cards here is that when you tap at the turnstile, it tells you your balance on the card. And there was an uproar when they tried to make the switch because it wasn't showing the balance. And so, when we think about all these digital platforms, it's really important for us to remember that beneficiary preference is really critical. And in many cases, that is cash, that is a non-digital form of money. Artificial intelligence, we talked about it a little bit before. The biggest thing here around artificial intelligence will be the ethical challenges around it. Explainability, transparency of these platforms in many cases remains to be seen. We don't often have explanations about why particular things happen at particular times. And so we need to be able to have AI that is responsible and that can be used in an ethical manner. Now, the challenge with this is that when you look at some of the countries within the region, not to mention names, are not particularly interested in having global regulations around AI. This is one of the things that we're seeing in Europe and the US right now is, okay, that we're going to start regulating AI. The problem with that is that even if Europe and the US are doing that, China is not doing that. Russia is not doing that. So there's all these countries that are advancing in their AI agendas in both positive and negative use cases, depending on what they're looking at. But if we limit the development of AI in particular markets like the US or Europe, it's going to really cause those countries to fall behind in the AI race. So how this shakes out over the next year or so in terms of regulation will be really interesting and will really kind of dictate the way the industry will go in the future. InsurTech is starting to really revolutionize across the region as well. One of the earliest examples of this I would use is the Zhong'an Insurance in China. And so I remember taking a flight in about 2007 or 2008 and having the option of getting flight delay insurance. So you would buy the ticket online and then, for a couple of extra cents, you would buy flight delay insurance. The idea being that if your flight was delayed a certain amount of time, that they would refund you some of the money for that, for the inconvenience of being delayed on the flight. Those micro use cases were very straightforward for online usage. I mean, if you're spending 50 cents on buying an insurance policy, it's kind of a no-brainer. But the holy grail on this has always been around the life insurance policies and the higher value financial products and services in the insurance space. We haven't seen an incredible amount of development on that yet. It's still very difficult to buy a customized, say, medical insurance policy online or a savings insurance policy online. But one of the things that is helped a lot by these InsurTech offerings is the transparency of some of these offerings. I'm constantly amazed here in Singapore that the mis-selling of insurance products in Singapore. As you can probably tell from my accent, I'm North American and born in Canada, but grew up in the States. I'm very used to just, you buy medical insurance, it's medical insurance, that's all it is. But here in Singapore, if you buy medical insurance, it also has a savings component, it has a life insurance component. It's a very complex product. And as somebody who's been involved in the financial industry for 25 years, when somebody tries to sell me a package deal, I usually am a little bit skeptical, and I usually want to buy the individual products on their own. And so transparency is a big issue in a lot of these markets. And I have family members that have been missold physical insurance offerings by insurance agents directly, because they're very complex. They have a lot of pages, and the elderly sometimes aren't entirely clear on the decision making and suffer from dementia and things like this. So the one of the benefits about InsurTech is not just the distribution, but the clarity and transparency of some of these products and services as well. Quantum computing is something that we haven't talked about much, but could reshape the industry with their capabilities, but in particular use cases. Unlike AI, which has many different applications across the industry, I'm by no means an expert in quantum computing, but quantum computing is very good for particular types of analysis or particular scenarios. So if you're doing what we'd be calling like a Monte Carlo analysis of various different financial products, that's where quantum computing help. Quantum computing in terms of risk management or being a customer service agent is really something that's down to AI on that side of things. So we're still very early days in quantum computing. Every month there's a scare article about how this is going to change the world. I think we can be a little bit more sanguine that it's going to take more time to do it, but there are particular areas within the industry where quantum computing could really change things. Now, the challenge of these first 8 trends and many of the other trends is cybersecurity, because as more of these financial products and services move online, so do the criminals. And so cybersecurity will be a renewed focus as digital finance continues to grow and be augmented by AI. One of my favorite stories around AI or examples around AI is email spam. And so we're very used to the email spam engine on our computer that uses AI to detect if something is spam or not. Now, you may not know this, but it's a very interesting fact that the Nigerian 411 scam, so this is the Prince Aluid, who has just died and left me $30 million. If you help me secure this money, I will give you 20% of the $30 million. These scams that come from various different countries around the world, these scam farms. One of the things you may notice about these spams is that they are very badly worded. So the grammar on all of these is horrible. And you may wonder why that is. And many people say, well, it's because the scammers aren't that intelligent. It's actually not that. It's the fact that the scammers, much like the rest of us, only have 24 hours in their day. And so what they want to do is filter for the most susceptible people that they can. So if you receive a mail that says Prince Aluid died yesterday looking for sending money, you're gonna, if you're more perceptive and on top of these things, you say, okay, grammatically this doesn't make sense. It must be a scam. Whereas if you don't notice that and then you respond to it, that person is much more likely to be scammed by the scammers. And so actually that bad grammar in these emails is a filtering mechanism. And that's because they have a limited amount of time. Now, as AI starts to go forward, I think, if we had a show of hands on this call, I'm sure all of us have tried to write an email or a letter using ChatGPT, and it becomes very easy to do. And 95% of the letter is perfect as it is. You don't need to change much in what you're writing. So now with the scammers having access to these AI tools as well, the challenge around cybersecurity in general is going to grow exponentially. And so that's why, when we look at all of these different platforms and the different technologies like artificial intelligence and quantum computing, cybersecurity is going to be really key going forward. A fact brought home by the fact that we had the outage earlier this week of one of the key platforms for Microsoft. And so, here at Changi Airport, there were huge queues because nobody could check in because the system was down. So cybersecurity will be really important as well. Fintech funding will likely continue to grow. That's kind of the downside of what we're seeing right now is fintech funding grew very rapidly as we kind of went into the COVID bubble, where the asset inflation was quite high and peaked in 2021. So this is fintech funding, I believe, in Asia we have on this chart here. And so it peaked in 2021, but we've seen it drop significantly. And the numbers in 2023 are 80% less than they were a couple of years beforehand. And that's really one of the key challenges for fintech, specifically in Asia, is funding. Now, one could argue of that 21, or call it 22 billion in 2021, a lot of those were pretty crummy, high valuation investments, right? So investments in companies that really didn't have traction, but there was an element of FOMO from many of the VCs investing in the industry. And so that drove this higher investment in the region. But at the same time, it does reflect a more cautious attitude that these organizations are having towards investing in the market. So this will be a challenge for fintechs in Asia, certainly going forward. Risks of the future, we talked about a little bit of these, the cybersecurity, the annual cost of cybercrime worldwide, 2017 to 2028 is expected to grow very rapidly as things move online, criminals move online, and we have these new technologies like AI and cyber and quantum computing that are driving things there. So that's kind of the end of my presentation. As I mentioned before, please do subscribe to our newsletter at Capron Asia. We every week send out a summary of some of the latest news of what's happening in the region, and on a regular basis publish reports kind of similar to this Money 2020 report that have a lot more insight into what we're looking at for the region. And of course, more than happy to connect on LinkedIn. You can find me there, Zen and Capron, and exchange more thoughts. But whilst we have time during this webinar, I want to pass it back to Sarah, and maybe we can go into Q&A.
Perfect. That was an enormous amount of information we covered in 30 minutes. That's fabulous. I know we've got a lot of people in the participants from Africa as well, and I think we really, I saw the similarities, in many of the trends, and many of the things that are being experienced in Africa are similar trends in Asia. I was struck hugely by the cross-border payments, the ability that actually the region will have instant cross-border payments in the near future. Gives me such hope for what can be achieved, because I think that's when we're talking about movement of people and how and trade and e-commerce, but also tourism, people wanting to go to other countries and spend money there. That would be a real game changer for the region. Do you agree?
You asking me in particular, Sarah, or some of our African participants?
And you?
Yeah. I think, the real question around the cross-border payments will be the economics of what's there. One of the things that strikes me is, when here in Singapore, we have a lot of foreign domestic workers, often, domestic helpers that serve as nannies or in many of the houses here. And it's amazing to see how they send money around the region. It tends to be mainly to the Philippines, a lot of female Philippine workers here. They know exactly what they should be paying, what the exchange rate is between the Singapore dollar and the Philippine peso. They know exactly, which agent they should go to send the money, how long it will take, all of the elements that are in that transaction. They're very aware of as they move their money around the region. Now, with that said, that has forced the margins on cross-border payments across the region to very small. The amount of money that it becomes a volume game for many of these players, whether it be an agent or an online platform. And for a new platform like some of these cross-border real-time payments to compete with that, the margins also have to be very small on that. And the initial elements of the economics that we're seeing so far are not really there. We've heard kind of between 1 to 1.5% of cost in terms of the FX rate plus the fees for these cross-border transactions. And so that can make the idea of using these for particular use cases like cross-border remittances not as appealing. Now, on the flip side of that, I have a couple of Singapore credit cards, and they charge 3.5% for 3 to 3.5% for foreign transaction fees. before the FX. So if I go to Thailand and I buy something for 100 baht, they'll convert that into Singapore dollars. They'll charge me 3.5% plus whatever the spread they're getting on the FX is. So in those use cases, then the 1 to 1.5% is quite appealing in those cases. So I think it'll be particular channels and particularly corridors, it will make a lot of sense, but in others, it won't be as appealing.
And I know I'm going to throw the floor open as well. Please do put your questions in the Q&A. We'd love to hear them and answer as many as we can. I'm going to pose one question that connects to that conversation that we just had. So, we said fintechs often operate in the payment space. There is clearly still some room for those fintechs to, keeping that cost of remittances low. Are we going to see, is the payment space in fintech saturated? Are these new things like this cross-border, sort of remittances going to really mean that fintechs need to start thinking about insurance, credit, savings, wealth management, moving away from the payment space?
Certainly, I believe that is the case. I mean, when you look at payments, whether it be domestic or cross-border, it's a race to zero. It's, these organizations are, because of the competition within each of these spaces, the organizations are really looking at, how can they lower the cost of payments, and that's forcing the competition to increase and the margins to decrease. So, for many of these organizations, really payments were seen as the entry point, and then all of the other financial products and services would be layered on top of that. That was certainly the case with, Grab Financial here in Singapore. They weren't making money off the payments, but they assumed that they would make money off the wealth management or the lending or the other financial products on top of that. And that narrative is only going to increase in the future as these platforms really struggle to find profitability in traditional payments and need to look outside of that to other areas.
And we've had a great question come in from Jean Yenger. He would like to understand what role regulation is playing in fostering this environment where fintech and innovation can thrive.
Yes, that is a good question. And hopefully there are no regulators on the call, but if there are, maybe you agree. Anyways, regulators, even in a place like Singapore, are often behind where they should be in terms of understanding new technologies. When we look at things, payments are relatively straightforward to understand, but things like crypto and Web3, I think many of the regulators across the region still struggle to understand that. And so, regulation is obviously a very important part of the industry, but it can be somewhat haphazard. And I think there's work to be done around this. A good example is buy now, pay later. As an example, there are very few markets across the region that regulate buy now, pay later products, which is, in my mind, ridiculous because they are a potential debt trap for consumers. They oftentimes are very confusing in terms of what they're offering, and they lull individuals into a false sense of security around what they can afford and what they cannot afford. And they're in many places, including Singapore. Singapore has, I believe they call them guidelines. And so, all of the buy now, pay later platforms here in Singapore are expected to register for these guidelines. But at the end of the day, if they don't, there's not really much downside. There's no punishment for not abiding by these kind of guidelines that are there. So I think regulators, there is a challenge for regulators in terms of having the right people in the regulators that understand what's happening in the market. There's a challenge of, obviously, I think the benefit of there being less investment into fintech at the moment is it gives regulators a bit of a breather. So, crypto is here, buy now, pay later is here, open banking is here. Okay, so we can take a breath, we can figure out how to sensibly regulate this and then move forward on it. So it's kind of a good time for the regulators to get on top of things. But there is still that challenge of, these segments of the market that really should be regulated better than they are.
And I mean, I always, at the moment, when you think about the speed of AI and how quickly that is going to potentially transform many industries, not just, the finance industry, but regulating against something like AI, as we talked about earlier, is going to be an immense challenge. Even understanding what AI is and its, the implications of it is just hard to sometimes get your head around as a human being, let alone as a regulator.
Yeah, indeed. And I think, the possibilities are truly endless with that. I think when we look back, I think back to kind of going to Sibos, which is the large event that Swift puts on every year. And I remember in 2015, the story was about fintech. And then 2017, 2018, it was blockchain. And now it's AI. But I think the difference is that in 2017, when we were talking about blockchain, it was really a solution searching for a problem. Whereas today, very clearly, AI is a solution to many, many problems around the industry. So I think it's a different market that we're in right now. But yeah, how AI will change things in the future will be telling.
I think it's tricky. We often complain a little bit about regulators, but actually, I wouldn't want to be a regulator trying to regulate with AI.
For sure.
I think that's a tough job. So Gand asked a similar question to Jean, which I know we started to cover, but I think there's a secondary element to her question, is around, compliance. How is the need to be compliant with regulations, shaping the fintech business? Is it still a costly process to be compliant? What are we sort of seeing that could help fintechs, especially sort of early growth ones, deal with that cost?
Yeah, and I think the cost is the big element of that, the cost of compliance, because when you look at the compliance is very straightforward. I mean, many of the regulations are reasonably well written, but having the systems in place and the wherewithal to be able to be continually compliant is really challenging. And so I think we've seen, if you look at the evolution of fintech in Asia, it was really an us versus them to an us with them mentality. And so you see that with a lot of the fintechs that will partner with banks, right? So, Wise is a good example. And on one hand, Wise works with DBS to use DBS's platform, because if you're moving money from Singapore to Malaysia, as an example, you're not going to beat DBS because the flows are just too massive. Similarly, Singapore to India, they might be worthwhile, but Singapore to South Africa, that might be somewhere where Wise has an advantage. And so you'll see DBS actually using Wise's business-to-business services to use that. And relying payments are one angle, but then many of the other financial models that require a certain amount of compliance are looking at banking as a service models to potentially, address these compliance challenges without having to incur the cost directly themselves.
I think, and it sort of gives those who've paved the way and spent a lot of the money creating that, those systems and processes, it gives them a chance to also think about alternative revenue sources as well.
Exactly. Yep.
Yeah. We've got a lovely question coming in from Ramesses. So considering the evolving regulatory landscape and increasing cyber threats in the fintech sector, how can fintech companies balance innovation with compliance and security and keeping a competitive advantage?
I think it really, you have to stick to your knitting within the financial services space. I think the companies that we've seen be very successful are not the ones that are trying to do everything, that are trying to do one thing very well and building from that. So a good example is Revolut. We've been critical of Revolut at particular times, but one of the things that they did well was really focus on that use case around cross-border payments and then build from there. Similarly with Wise, cross-border payments, let's make it easy to do cross-border payments. And now they're integrating other financial products and services, but really at that starting basis point. Now, the benefit of that is that your compliance needs are related to one financial product or a couple of financial products rather than the entire industry. If you're selling insurance products and wealth management products and payments products, then all of a sudden your compliance costs are going to go up dramatically as you have to deal across all of those different elements. So that is quite important. The ensuring that you have that correct focus on that. But yeah, truly finding that balance on innovation and compliance is challenging. But again, when you look at the models that are out there, sometimes it's very simple. Sometimes it's a better customer experience. It's a better UX. And that's something that doesn't involve compliance. That's something that everybody can do reasonably well, but it's just understanding the customer and having the right product, the right service at the right time to the right individual is really important. And so I think, too often we look for these massive changes in what organizations are doing, and we assume that it has to change the world, when in reality some of the most successful fintech business models that we've seen, Alipay is a great example. I mean, Alipay, when they came up with the QR code, they were solving the issue about friction in physical point of sale payments. So in China at the time, if you wanted to use a card payment, you'd have to insert your card, type in your PIN, and do a signature. And that would take a minute to make that transaction, whereas a QR code could be done in 5 seconds. So there's no particular sexy technology. I mean, QR codes have been around for decades, used for inventory purposes in Japan, and then converted to be able to use for payments. It's using mobile technology, it's using payments technology, but there's nothing particularly there. But what they did very well was they focused on a particular pain point, a particular point of friction in a use case, and they innovated around that. And so I think that's one of the really interesting models and things to think about. Is we don't have to boil the ocean to really make a change. We can focus on something very specific, incremental changes, focus on pain points, focus on the beneficiary preferences and customer experience, and we can get there.
That's such an important point and a reminder for us all that fintech became successful at the first place because it was just addressing the areas that traditional financial institutions were not delivering well, and that was where the early foothold particular sort of came, and also reaching people that perhaps traditional banks hadn't been reaching, or even if they did reach with an account like you were describing with high fees, you weren't getting that kind of personalized, helpful, meaningful service that you needed, and fintech can fit into those gaps particularly well, and perhaps is more connected to its user base than maybe traditional financial institutions are.
For sure. Yeah.
Interesting. And I think one of the things that you talked about digital banks, and we've got a question here from Saiful Alam about TimeBank, who has been actually a very successful digital bank in South Africa, targeting a customer base that's low income, not currently served well by the traditional banks that exist in the country, and has been able to grow their profits, become profitable within a record space of time. And other countries, it looks like, sort of what Saiful is saying, are following in a same model. What, in your opinion, is it use of technology? Is it understanding customer pain points? Is it the partnerships and where it sort of, because obviously TimeBank works well with retail stores, grocery stores, where people normally would have to visit at least once a week. And is that a model that you're seeing in Asia as well?
Yeah, well, I think TimeBank has now set up in the Philippines, I believe, in Asia, and has become reasonably successful there quickly as well. I think their headquarters nominally is here in Singapore, but heavily established in the rest of the region as well. I think it's again it's fulfilling those needs. The average underserved individual on the lower end of the income scale would be incredibly risky for a traditional bank, and unprofitable as well. If you think about the branch banking model for a bank like DBS or something, to bank somebody that has $10,000 in their bank account is not, well, 10,000, say $1,000 in their bank account is not a very profitable way, and it's not going to be profitable for the individual either, because they'll end up paying fees and everything else for that. Whereas many of these banks like TimeBank are really, again, as Saiful mentioned, operating through the channels where the customers are, offering products and services that the customers need, and that's a recipe for success in this.
Great, I love that. We all need a recipe for success in particularly difficult times. And for those fintechs who perhaps are struggling to raise those funds, because we know that is a challenge that is happening. I guess being very clear about your your product, how you are unique, and how you are going to reach and serve those individuals is a, I suppose, a way of trying to maintain a little bit of competitive advantage and attract funds over your competitors.
For sure. Yeah.
We've got a couple of minutes left, so maybe we can squeeze one more question in. So any other questions, please quickly pop them in the Q&A. But I want to sort of just talk about a term that many of us, particularly those of us who deal in the financial inclusion world, feel particularly uncomfortable using, and that's the word wealth. When we think about wealth management, we often feel about, people that have got an enormous amount of money, but actually we're trying to bring that word wealth to the average human being that just has $1 or $2 to save and invest. I'm excited for the potential about that. How would you sort of encourage others to sort of think about adding that product and service to their current offerings to their consumer? How can you describe that product to those who perhaps traditionally would not think wealth is for them?
Yeah, that's a really good point. And it was actually something that struck me when I first came to Asia, well, specifically China, is when you talk about wealth management, it is that very basic level. It's the average individual that has $5, $10 that wants to put it somewhere and grow it. And there's a couple of different elements around that. I mean, one is obviously education. A lot of people they don't understand what wealth management is. They don't see the need for, proper wealth management. And so it's nice to see some of these tools being put into some of the platforms across the region. So a good example is like, some of the ride-hailing platforms or the gig economy platforms. And so oftentimes when a driver like finishes their shift and they receive their payment, they'll get an option. Oh, do you want to put 10% of this into a savings plan or 10% into a vault that you're not going to touch for a while. And so that kind of encouraged savings or a gamification of savings can be very powerful for this. But truly, I mean, when we look at wealth management, it needs to be digital for sure, because the wealth managers that are making money are the ones that are serve and I experience this as an individual, right? If you have $100,000 in the bank, you still won't get a wealth manager. You need to have $3, $4, $5 million before you get into that private banking segment where somebody will actually take care of you. Hopefully someday we'll get there. So I just have to deal with my internet interface and the kind of standard retail banking experience. But certainly that idea of wealth management is much more than just at the high end, but is truly trickling down across the entire financial industry.
Yeah, I can't wait to see that term be embraced by many, because even for me, I've lived in the UK, many African countries in my lifetime, but thinking that I can have a wealth portfolio was a huge mind shift for me, because I just always think about that as being billions of dollars, not sort of hundreds or thousands or even tens. So it's great to sort of see that encouragement of savings, but also thinking and beginning to understand investments. And I think when we talk about digital financial literacy, we have a huge scale at which we need to tackle, those who are terrified of using a mobile device for fear of, not understanding it, which you mentioned, actually cash is still king in some parts. But all the way through to sort of people like being able to understand, savings, investments, insurance, being able to find all the right products and services that actually add that advantage to themselves, lift them out of poverty perhaps, and enable them to grow into having a sustainable livelihood for families. I think having those products and services for everybody, no matter where you are with your own personal income, is going to be phenomenally important.
For sure.
I see we have hit the hour, but Bernice has actually asked a really interesting question, so I'm going to sneak in and ask one more before we close. And Bernice has asked, what is the place of women in digital finance, both as consumers and also in leadership roles? That's a super question, Bernice.
Yeah, and I think the thing that strikes me is conversations I have with my wife, and it's very clear. We just came back from a holiday and vacation. She is very good at overall planning. She is amazing at, okay, today we're going to do this, tomorrow we're going to do this, the next day we're going to do this. She is awful at booking flights. I'm much better at that. And so it's really, that seeing her strengths over mine has been really compelling. And when you think about the role of women in leadership positions within organizations, it's so critical for understanding the nature of the customer segment, because there have been many studies that show that women are indeed, in many countries, they are the ones that are controlling the finances. They are the ones that are better with finances, that are more likely to be saving and putting the money in the right place. So to be able to understand that customer segment, we need to have people in leadership positions or organizations to be able to affect the change, to be able to address that. And so I think that's super important to have that representation there, because it's a different way of looking at things. It's a different segment of the market, and bring different strengths to the table that are really important for ensuring that we are getting to that last mile, and that we are servicing the people the way that they want to, the right products, the right services, the right time, and the right place.
And I think that the right services, the right products, the right time, the right place is a really great place to actually end our discussion today. That is what we're all aiming to achieve, whether someone's income is unstable, below a couple of dollars a day, through to earning much more than that. Actually, financial services should serve all of those people and enable us all to grow our wealth and lead happy and healthy lives. Zenon, I'd love to carry on, but I know we all have to let everybody get on with their lives, and you and I have to carry on. But it's been a really insightful, wonderful presentation that you gave that kind of summarized those key trends. Really appreciate your time today. Thank you very much.
Thank you, everyone. Thank you, Sarah, for the invite, and look forward to keeping in touch.
Absolutely. And thanks everyone for joining us today. We'll send you all an email with some LinkedIn posts so that you can kind of keep following us and keep in touch also with us, so that we can share future webinars and reports, etc. with you all. So have a wonderful day, everyone. Thank you so much.
Take care.
Bye, everyone.